In a couple of weeks' time, the Mauritian government will prepare a government budget. But what exactly does a government budget mean? Well, in simple terms, it is an exercise where the government accounts for revenue and expenditure. As you can see in the diagram, it will call for a balancing act. Okay, but what really constitutes revenue for the government? Let's dive in and see. Well, revenue consists of taxes on goods and services. This is normally in the form of value-added tax. Taxes on income. Here we're talking about personal income taxes, as well as taxes on profits. We are speaking here of corporate entities having to pay 15% of their profits to the government. You will be glad to know that the bulk of revenue for the Mauritian government comes from taxes on goods, services, income, and profits. But of course, there are other revenue, such as grants, maybe which are received from other governments, property income, social contributions, and other revenues. What about expenditure for the Mauritian government? Well, this consists of social protection. We're talking here about basic retirement pensions, general public services, probably road construction and infrastructure, education, health sector, public order and safety, as well as economic affairs. Let's have a look and see how the government did by analyzing the 2020 and 2021 figures. Government revenue, represented here in blue, was 155.5 billion Mauritian rupees. Government expenditure, represented here in orange, was 180.1 billion rupees, which leaves a bottom line or a government deficit of 24.6 billion rupees, represented here in gray as a negative figure. How? Well, if you take 155.5 of government revenue and you deduct 180.1 in government expenditure, you're left with a negative figure or a government deficit of 24.6 billion rupees. Now you might be wondering, is this okay, and can the government sustain the budget deficit? The answer is yes. This is where the government may have recourse to public